Certainly NVIDIA, but there is kind of a shift in leadership even within the Mag 7. What's your take on the TPU versus GPU discussion?
Well, I think, one, there's just a huge amount of demand in this space still, and there's going to be more competition. NVIDIA's had this big lead, and, other companies like Google are coming in, and it's still obvious that I think NVIDIA has the lead, but they have these huge gross margins, and it makes sense that these other companies with big balance sheets are going to try to come after that as a whole. So I think what you're also seeing as a result of that is you're just seeing within tech, you're seeing this kind of big dispersion. So it's not monolithic trade anymore, and that's where fundamental work does help. If you look at the Mag 7 this year, what's interesting, only 2 of the 7 stocks of the Mag 7 are actually outperforming in the S&P, but the ones that are outperforming this year are outperforming by a big margin, which is lifting the overall market. And I think that's what you have to keep in mind. Like, not everything's going to work, but the ones that work, if you can have big gains, it's almost like venture capital that they can often offset some of the losers.
I do want to ask you about NVIDIA. The CEO, Jensen Huang, he's on Capitol Hill. He is meeting with lawmakers to answer just general questions about AI. But Senator Elizabeth Warren is criticizing the fact that it's a closed-door meeting. She says that Huang should be, quote, brought in to testify publicly over chip sales to China. He spoke to Grady Trimble of Fox Business. He said the U.S. should get first dibs on the chips before they send them to China. If you don't mind, run us through why you're buying NVIDIA here. And what about, this controversy with him on the Hill today?
Well, yeah, look, a lot of people, I think, want to keep Elizabeth Warren out of those meetings, so I don't blame the companies for that. But I will tell you, look, NVIDIA's case still is the leader. They're still the lead dog. They're still the lead horse, Cheryl. There's a lot of competition out there. There's a lot of companies that are going after NVIDIA and the chips and the sales, whether it's China, U.S., wherever. The point is, NVIDIA is the leader here. They're the dominator. The chips that they keep releasing on these updates through earnings are unbelievably powerful. They're unbelievably going to be cost-effective, too, because they can produce enough of them, hopefully, to meet that demand. And so it's so funny to me as we look at the, say, general marketplace here. Today, we're worried about AI demand. 2 days ago, we're worried about too much demand for chips. So you see how fast this goes through kind of a cycle? Jensen Huang, the CEO of NVIDIA, has been ahead of this game for the whole time, and I think he stays ahead. And NVIDIA, too, another name, Cheryl, that's pulled back and not felt the love that some of these other areas in AI have. That's why I think you should get into it right here.
Yeah, no, that 5-year chart looks amazing. Got some breaking news right now. NVIDIA CEO Jensen Huang confirming that he met with President Trump today to talk chip export controls. Now, this meeting came ahead of Huang's visit to Capitol Hill. He is going to be meeting with lawmakers. Here is what Jensen Huang just told our own Grady Trimble about those controls. Watch.
Do you think that China should have the same access to the same types of chips made in the U.S. as the United States does?
I've said it repeatedly that we support export control and that we should ensure that American companies have the best and the most and first.
Does that mean they have inferior chips in China, though?
No. It just means that we have the first and the best at all times. However, we need to be able to compete around the world. The one thing we can't do is we can't degrade chips that we sell to China. They won't accept that. There's a reason why they wouldn't accept that. And so we should offer the most competitive chips we can to the Chinese market.
The Chinese market is important for NVIDIA. Let's be honest here. The stock is actually down about 0.5% right now. We're going to continue to follow this news story as it develops in Washington.
Only 3% of companies in the U.S. have gone down the AI path. It speaks
only
to
3%?
our view.
Wow.
Only 3%. And it speaks to our view that, like, when you call this a bubble, it is way premature. Look, if someone like myself spends so much time, on the road, I just saw it in Asia for 3 weeks. Demand to supply is, 12-1 for NVIDIA chips. This hasn't even happened globally. And guess who's leading in the global race? It's U.S. is leading China when it comes to tech. So to me, the use cases now start to play out. The derivatives, the second, third, fourth derivatives are playing out. And that's the key. Look, that is the key theme that we're seeing from Marvell to Mongo to Salesforce, I believe to Snowflake and others.
I'm curious, too, just about on the chip side of this as well. We heard from Jensen Huang a little bit earlier today. He was on Capitol Hill meeting with senators, trying to address this issue with China and being able to sell there. Does China become a market for us, a market at least for U.S. companies at some point?
Oh, yeah. I think that's, you could talk about the Trump visit in April and then probably reciprocal here. It's a matter of time. We are not going to give that market to Huawei and take it away from NVIDIA and what I believe U.S. chips. And that's what the godfather of AI, no one has a better perspective of what Jensen's seeing. you don't want to give that market to Huawei and domestic competition. I think that's what's going to continue to play out in this arms race. That will be part of NVIDIA's growth story over the next 12, 18, 24 months. I think it's all part of this game of high-stakes poker going on between DC and Beijing.
I am also curious about the partnerships, and they continue. We did hear just a few minutes ago from Snowflake strengthening that partnership with Anthropic, basically integrating those Claude models deeper into the platform. Does that accelerate as well, Dan?
It has to, because in this arms race, that's what everyone's focused on. Put stakes in the ground, whether it's NVIDIA, OpenAI, Snowflake, everything Lisa Su's doing, AMD. You know, look, they could get criticism for it in terms of some of the circular financing and other issues. We're talking about $3 to $4 trillion that's going to be spent in the next few years. This is not the time to look at this from sort of, the back seat. It's the time to be aggressive, and that's what investors want to see. And I think we are going to look out. It's why we think tech stocks are up another 20% next year. But the bears will watch this AI party through the windows. It's still 10:30 p.m. and that party goes to 4 a.m.
Well, NVIDIA CEO Jensen Huang meeting with congressional leaders today as he tries to persuade lawmakers about AI regulations and chip export restrictions. Emily Wilkins has the details. Emily.
Hey, John. Well, yeah, look, this meeting comes as NVIDIA just notched really a major win on Capitol Hill. There was a measure that would have limited AI exports, and that was now removed from a major must-pass bill after NVIDIA and then the White House opposed it. And I asked Jensen Huang about that balance between China hawks who want to see stricter exports and his position that more chips being sold overseas is going to help solidify U.S. dominance.
We have to ensure national security. Remember, China makes plenty of chips, and their military has plenty of ample chips and bought Chinese chips to build whatever they need. We need to ensure America can continue to win the technology leadership position around the world.
Senator Tim Scott, the chair of the Senate Banking Committee, said in a statement after the meeting that maintaining that edge, the U.S.'s edge, also means protecting sensitive U.S. technology through strong export controls and ensuring innovators have access to the capital they need to build here at home, including modernizing how companies raise funds in both private and public markets. Huang also told me that he did meet with President Donald Trump today. He said they discussed export controls, said he's not expecting any sort of announcement anytime soon. And Trump, too, when asked about the meeting, complimented Huang, saying he was a very smart guy. Guys?
You know, Emily, this is super fascinating to me because a lot of the data that's been collected out there, and I suspect we're going to get more in coming days too, suggests that there's a lot of bipartisan support for export controls around these chips and a lot of concern both among lawmakers and among the American public about China's military might. So given the fact that you're at the CFO Council Summit today, and you have been talking to some of those lawmakers, what has been the feedback on this particular topic from some of those policymakers?
So I had a conversation today with Senator Tom Tillis. He's a Republican. He's actually on the Senate Banking Committee. Wasn't able to get to that meeting with Jensen Huang, however. But he said, look, there's an understanding that the U.S. does need to be dominant when it comes to AI. He did have some concerns about those export controls. And I've talked with folks on the Hill who have it seems like there might be a bit of a change. There was initially a lot of concern about what would happen if China got a hold of some of these chips. But Tillis said, at some point, they're going to get there. If they want to sort of take the U.S. technology, deconstruct those chips, they can. He's like, what's most important is that making sure that the folks are using U.S. chips and that they're building technology around U.S. chips, that that's really the way to maintain dominance.
So let's get to NVIDIA CEO Jensen Huang on Capitol Hill today talking about demand for chips and the need to protect national security. CNBC's Emily Wilkins got all the highlights. Emily.
Hey, Melissa. Well, yeah, Jensen Huang, he's coming to the Hill after the Senate really just did a 180 on semiconductors. Just a couple months ago, they passed a provision as part of a larger package. It would have restricted chip exports, but now that same provision is being removed from that package after NVIDIA and the White House lobbied against it. Jensen Huang said that he does support export controls, but said that the private sector is already ensuring that most advanced chips are going to U.S. companies. He also weighed in on another hot-button debate around whether state AI laws should be overwritten to help ease the regulatory burden for companies.
State by state AI regulation would drag this industry into a halt. and it would create a national security concern, as we need to make sure that the United States advances AI technology as quickly as possible. A federal AI regulation is the wisest.
Now, Huang's meeting was with Republicans, but we're now hearing some blowback from Democrats who were upset that they were not included in the meeting. Senator Elizabeth Warren is now out with a statement criticizing the meeting, saying that Huang is sneaking in to meet with Senate Republicans behind closed doors, and saying that he should be brought in to testify publicly and under oath, not pushing his agenda in secret meetings. In addition to that meeting with Senate Republicans, Huang also met with Speaker Mike Johnson as well as President Donald Trump. He told me that he and the president did speak about export controls, but he's not expecting any new announcements anytime soon. Melissa?
Emily, thank you. Emily Wilkins. So there's nothing in NVIDIA's forecast about China right now. So it would be a major upside. If there were to be some relaxation of the export controls.
Yeah, it also comes at a time, though, where China has placed import controls for all intents and purposes, encouraging their companies who are buyers of these chips. You've also seen these companies stockpiling these chips, accessing them through places like Singapore, training their models outside of the U.S., having access to these H100s or H200s, which are obviously scaled down versions of the Hoppers. I'm not so sure if you think about the timing of this is like, okay, we've been spending a lot of time talking about Google TPUs. We've been talking about ASICs. We've been talking about Trainium from Amazon. There's just all of a sudden a lot of competition. And I think all of these potential buyers are thinking, am I going to buy these chips for all these years, right, at the expense of my margins for their margins, right? And I think this is all happening at a time where I don't think Jensen really has a choice other than to push for this, despite the fact that there's national security concerns on both sides of this. He is on one side of it, but the irony is that he's going and doing these backdoor meetings with Republicans, and this is fair weather federalism. Isn't the Republicans the ones who actually want the states to regulate everything, not the federal government? And it just seems like this is a very opportunistic move by Jensen.
Well, a number of things. I do think the in practice of having every state have their own regulations is a disaster. Crippling, yes. When you think about interstate banking and how ridiculous that was, and how it just created layers and layers of regulation, and the benefits seem to be very small. So I think that this is similar to that, and I of course understand why he would want it, or any player in the space would want one regulation. So there's that. I mean, the stock was down, I guess, on the Microsoft thing. We'll get to that later. I agree with you, Dan, that there are sales to China. They're just not directly there. Right. I don't know how significant that is, but I do think that's happening. So. I guess I don't know that it matters so much, though. If the models all show no China sales, then that's what we're looking at. Still, the demand is huge, but there's just a big overhang in the space, and the debt issues of building all these data centers still hangs out there and is big.
Queen Gertrude, familiar? You went to a good college.
Gertrude.
Hamlet.
Oh, I thought you meant a real queen. Okay, yes.
No, I don't know if there is. There might be a Queen Gertrude somewhere, but in literature. And we've said this, the lady doth protest too much, methinks. He's been talking a lot over the last few months, and you have to wonder, what is he so concerned about? If things are as rosy as they portray, he's out there talking a lot about competition, all these other things. That would be concerning. And I'll say this, there is competition coming, I think, in a meaningful way, and 75% gross margins are not going to be enjoyed in perpetuity.
I mean, Marvell Technology raised their forecast on this notion that they have this huge contract with Amazon for Trainium TPUs, Trainium 3 and 4. So, to the concern about competition, that really underscores that.
Yeah, well, NVIDIA's been in a declining trend line for the last month, and I do believe that their 4 to 6 main customers are going to be their main competition. Every time he goes to DC, he tries to pull a new lever. I think he's out of levers right now, and the stock goes lower.
All right, I hope you're all doing great today. Today, it's being reported that the GAIN AI Act has been removed from the larger defense bill. You may remember that the act was passed by the Senate and then went to the House. And it's being reported that it has been removed from the defense bill, which is a very positive development for NVIDIA. As I've said repeatedly, while it may have good intentions, the GAIN AI Act would have very negative, unintended consequences if it were signed into law. If the act was signed into law, American chip makers would lose market share in various markets around the globe, and the door would be swung wide open for Chinese competitors like Huawei to step in and take those markets. This would have been a massive strategic mistake on the United States' part. The GAIN AI Act being removed from the defense bill is a very positive development. So yesterday, NVIDIA published a blog post saying they have partnered with Mistral to accelerate the new Mistral 3 family of open models. Mistral Large 3 is a mixture of experts model, or MOE model for short. Instead of firing up every neuron for every token, it only activates the parts of the model with the most impact. This results in efficiency that delivers scale without waste, improved accuracy, and makes enterprise AI practical. And then today, NVIDIA published another blog post saying that MOE models run 10 times faster on NVIDIA's Blackwell NVL72. According to NVIDIA, the 10 most intelligent open source models all use a mixture of experts architecture, and they run 10x faster on NVIDIA's GB200 NVL72 compared to H200. It appears that MOE is becoming the architecture of choice for frontier models, and NVIDIA's full stack inference platform is key to unlocking its full potential. As I've said in the past, the next time you hear someone claim that NVIDIA systems are not good at inference, remember that they're actually the best on the market and likely will be for years to come. Also today, Jensen Huang appeared on JRE for an interview. It's 2.5 hours long, so I'm still going through it, but I wanted to bring that to your attention. I'm going to talk more about NVIDIA in a moment, but first I want to share some important details about Iron. Today we got the pricing details of Iron's recent offerings. As a reminder, Iron recently announced 2 separate offerings, a direct registered offering and a senior convertible notes offering. I continue to be bullish on Iron long term, and this doesn't concern me at all. Let's go through some of the details. Let's start with the direct offering. Iron sold nearly 39.7 million shares at a price of $41.12 per share. From this offering, Iron raised about $1.63 billion. Iron then used that capital to repurchase older existing notes and extinguish those notes so that they're no longer convertible into shares. It's worth noting that the notes that were extinguished had a coupon rate of 3.25% and 3.5% respectively. I'll come back to that in a moment. Now let's cover the senior convertible notes offering. Iron offered 2 batches of notes. Each batch allows Iron to raise $1 billion for a total of $2 billion with the potential for initial purchasers to buy an additional $300 million worth of notes. The coupon rate on these notes are 0.25% and 1% respectively, which is much lower than the rates on the older notes that Iron extinguished. In connection with the convertible notes, offering Iron also entered into capped call transactions in order to reduce the risk of dilution. This is similar to what Iron did in their last senior convertible notes offering. The initial conversion price is $51.40 per share, but thanks to the capped calls, the risk of dilution is reduced up to an initial cap price of $82.24. What does this mean in plain English? It means that when the share price is above $51.40, but below $82.24, Iron can choose to pay converting note holders with cash instead of issuing new shares, and the cap calls help offset the cost of those conversions when the share price is within that range. Once the share price rises above $82.24, that's when dilution could occur. The initial cap price of $82.24 per share is a 100% premium from where the offering was priced. All right, now let's bring it all together and consider what Iron has done here. By means of these 2 offerings, Iron is aggressively refinancing, cleaning up its capital structure, eliminating the worst dilution risk by extinguishing those older notes. Iron is extending debt maturities, lowering their interest burden by extinguishing the existing higher debt notes and offering much lower interest notes. Iron is helping to reduce the risk of dilution until $82.24 by means of the capped call transactions. And Iron is freeing itself to scale AI infrastructure while also giving themselves more capital to do just that. Overall, from the perspective of a long-term investor, this does not concern me. Iron has essentially refinanced older debt at much lower interest rates and also raised capital to expedite their AI build-out. These are the 2 questions we should be asking. Does Iron have demand? And is Iron able to execute on their expansion plans? As for the first question, Iron is seeing very strong customer demand, including from companies like Microsoft. Over the next couple years, Iron will most likely sell whatever capacity they can produce as the world is severely compute constrained and constrained on power. Iron should have the compute as they are now an NVIDIA preferred partner. And they also have roughly 3 gigawatts of secured renewable power. And as for the second question, can Iron execute on their expansion plans? I think the answer to that question is very likely yes. Iron has a track record of delivering on what they promise. Iron recently secured a $9.7 billion contract with Microsoft. In order to fulfill that demand, Iron must spend on CapEx to build out the necessary capacity. Company leadership told us that will cost $5.8 billion in CapEx. And keep in mind that Iron will enjoy the benefits of that investment for years to come beyond just the Microsoft contract. Iron leadership explained that they already had $4.4 billion of the necessary $5.8 billion, and there was a remaining $1.4 billion of CapEx that would be needed. Company leadership told us they had a range of options to fund that remaining $1.4 billion, including corporate level issuance. And so this offering is nothing to be surprised about, nor is it anything to be concerned about. They literally told us about this on the recent earnings call. Iron has forecasted that they will reach an AI cloud annual revenue run rate of $3.4 billion by the end of 2026, and they're working to rapidly expand their AI cloud capacity. And over the next couple years, Iron will likely sell whatever capacity they can produce as the world is constrained both on compute and power. That is what we should be focusing on if we're long-term investors. I know some of you have mentioned well-known short sellers targeting Iron. I've also heard pundits like Kramer up in arms about Iron, calling it a fake company and saying it's like a company from the year 2000. But there's a big difference between Iron and those companies from 2000. Iron actually has customer demand, and very strong customer demand at that. Anyway, it's important to not get distracted by the noise. I'm not saying that we should completely ignore those who have different opinions. That's not at all what I'm saying. I am saying that if someone's analysis does not hold up, or if it's based on platitudes rather than facts, then it is just noise and not worth paying attention to. All of that to say, know what you own, focus on the fundamental trajectory of the company, and ignore the noise. I continue to be bullish on Iron for at least the next 1 to 2 years, and that has not changed. My fundamental view of the company remains the same, and the long-term thesis remains intact. I think there is material upside over the next 1 to 2 years despite the cries of the critics, and that has not changed. That being said, as I have said many times in the past, we need to be prepared for pullbacks along the way. The stock is not going to move up in a straight line. There'll be pullbacks along the way, and we need to be prepared for those. And always remember, short-term fluctuations in the stock price does not change the long-term fundamental trajectory of the company. Now let's get back to NVIDIA. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. Today, most analysts are hyper-focused on NVIDIA's data center business, and it's understandable why. Data center represents the vast majority of NVIDIA's business today. At the same time, I don't think that most analysts are adequately factoring in growth from some of NVIDIA's other business segments into their long-term estimates, especially physical AI. While most analysts today are hyper-focused on NVIDIA's data center business, NVIDIA is actively establishing themselves as the underlying infrastructure of physical AI. NVIDIA leadership has called physical AI, quote, a multi-trillion-dollar opportunity and the next leg of growth for NVIDIA. This is not getting enough attention right now, but I think it will get a lot of attention in 2026 and 2027. I am completely serious when I say that I think NVIDIA's physical AI business may eventually be larger than their current data center business. There's a reason why I keep mentioning physical AI in these videos. NVIDIA sells the hardware for the data centers where the models are trained. They offer Omniverse where the models are taught and tested. And NVIDIA also sells the hardware that allows on-device real-time inference through NVIDIA AGX, allowing robots to have intelligent interactions with the real world even when they are not connected to a data center. Notice that NVIDIA is taking a holistic platform approach to physical AI, and they're embedding themselves as the underlying foundation supporting all of it. Over 2 million developers are already building on the NVIDIA robotics stack, and this is not getting enough attention. I continue to think that most analysts' long-term NVIDIA estimates are too low given what's ahead. As for production ramps, Blackwell Ultra is ramping very quickly right now, leading to revenue growth acceleration. Rubin is on track to launch in 2026. Then we're expecting Rubin CPX at the end of 2026. Later on, we're expecting the launch of Rubin Ultra in 2027 and Feynman after that in 2028. We have a clear data center product roadmap stretching into 2028, and Jensen believes there will be $3 to $4 trillion of global AI factory build-out between now and 2030. That means Jensen is expecting growing AI demand and an expanding total addressable market underpinning all of this. I don't think we are anywhere near any type of bubble bursting type of event. With all of this in mind, I seriously think that NVIDIA still has plenty of runway ahead of it, and I think this company will be worth substantially more in future years than it is today. At least that's my view of the situation. Remember to stay calm in this market. Remember to maintain a long-term perspective, and do not make any hasty or irrational decisions. With all of that being said, I hope you all have a great rest of the day, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.